This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordes. Thanks for joining us at XM.com. Global risk appetite crumbled on Friday after China announced plans to establish an enforcement mechanism for safeguarding national security in Hong Kong. The news came hot on the heels of legislation to curb secession and sedition movements in Hong Kong. Beyond raising concerns that this could resurrect the street protests that ravaged Hong Kong's economy last year, the move could also lead the U.S. to revoke the city's special trading privileges, which are conditional on a high level of autonomy. If Hong Kong's special financial status under U.S. law are revoked, that could choke off a vital source of U.S. dollar liquidity for China, crippling many import-oriented sectors that rely on the U.S. currency to function smoothly. Naturally, that would mark a huge escalation in the trade tech capital war between the two nations, inevitably drawing retaliation from Beijing. Asian equity markets were an ocean of red, with Hong Kong's battered Hang Seng Index leading the way lower, falling by 5.5%, and futures pointing to a 1% lower open for the S&P 500 when Wall Street opens today. In the FX spectrum, the defensive plays come roaring back, with the yen and dollar leading the way higher as investors braced for America's response. Back to the markets, the news kneecapped the attempt of many charts to break out of their recent trading ranges and enter more optimistic waters. The S&P 500 and the Australian dollar both posted new highs this week, but have since retreated to re-enter their previous ranges, while the euro has turned lower. The Canadian dollar is a similar story. Over the coming weeks, this will be a crucial spot to watch. If all these charts continue to retrace within their ranges, then investors are still collectively hesitant to trust this recovery, whereas a simultaneous breakout would signal that we've entered a new, more positive trading paradigm. For now, though, a lot will depend on how powerfully the U.S. reacts. The worst-case scenario for markets would be if the U.S. moved to revoke Hong Kong's special status. This is today's Daily Market Comment. Thanks for joining us at XM.com.